For your money this afternoon, stock markets have seen more red than green in the past week because of the war in Iran.
That makes it tough to be an investor, even if the one thing you do is add money to a retirement account. Right now, we are joined by Stephen Elwell, Chief Investment Officer and co-owner of Level Financial Advisors. Stephen, thank you very much for coming in this afternoon.
Thanks for having me.
So first off the top, give us a rough breakdown of how exactly stocks have been looking lately.
Yeah, ever since the announcement of and development in Iran, there's really been sort of some uncertainty around how long this is going to last and what it'll do to oil prices and what effect it's going to have. So the market really over the last week or so has lost about 3 or 4% in the U.S. and more overseas.
So a lot of investors will say that this is a good time to buy stocks because they are lower in value than what they have been in the past. What is your recommendation for what the average investor should do out there with their money and their investments?
Yeah, the average investor that has a longer time frame, 5 years or longer, this really should be viewed as an opportunity to buy something you were already going to buy at a lower price. There is really no reason or evidence to believe that 5 years or longer from now, stock prices will be still as low as they are now as a result of what's going on.
And to piggyback off of that, there are some people out there who may feel the need to panic sell, right? Why is it maybe not the best idea to overreact?
Yeah, usually in geopolitical events, the evidence kind of tells us that 6, 9, 12 months later, things have recovered and moved on to whatever is happening in the economy after that. I think it's important for investors to just take a breath. You don't have to take action immediately. Panic is not an investment strategy. So I think, it's a good thing to recap where you're at, but you don't have to take any immediate action.
Would you say that panic and taking your money out could actually be the worst thing to do?
It definitely could be. Evidence tells us actually the more that you tinker with your portfolio and the more that you react on your emotions, the worse your returns probably will be in the long term. So I like to joke sometimes that the ostrich strategy of sticking your head in the sand, maybe take another look next month, oftentimes these things will pass during that in terms of market volatility.
For anyone out there, maybe they're new to investing, they want to dip their toes in, give us your best financial advice.
Yeah, I think if you can keep your costs low and diversify by using something like an exchange-traded fund or a mutual fund, it's a great time to enter the market if you're going to put that money to work for years and years for your long-term future. To get a lower price for something you wanted to buy anyways generally is a good thing.
Right. What's your recommendation to people or to investors out there who might be looking to diversify, right? Because we know with rising prices out there, inflation, gas prices going up, things going on in the Middle East, people might not be so willing to spend money like we expect during the summer months. So do you think that people should be looking at maybe other advantages out there?
I do think it's a good idea when you think about your investment strategy to own different types of things. So that might be U.S. stocks, both big and small, or stocks outside of the U.S., which are very accessible and can be purchased at a relatively low price in terms of implementing that investment strategy. So Europe, Japan, emerging markets, or even the bond market if you have a shorter time frame. So CDs, treasury bills, there's all sorts of different ways that you can put your money to work based on what your risk comfort is and your timeline is.
Very quickly before we let you go, because we mentioned 401ks at the very top too, kind of how does that play into this?
Actually, 401k investors, this is sort of, in terms of the market going down, a great thing because their money regularly goes in every 2 weeks when that payroll hits. So they don't even have to make an active decision to buy while prices are low. So as your payroll hits this Friday or next Friday, hopefully you're taking advantage of saving to that so you can put some money to work at a lower price, which will be a good result.
Very good. Steve, thank you for the tips.
Thank you.
Thank you for coming in.
We do appreciate it.